Well, the US market jumped more than 1% last night, even though inflation in January was a bit higher than expected. Economists had thought inflation in America would stay at 3.1%, but it ticked up to 3.2%, highlighting what they call the last mile problem, that is, the difficulty of squeezing the last dregs of inflation out of the system. But investors weren't perturbed and continued to buy big tech stocks like toilet paper in a pandemic. The local market couldn't quite keep up, posting a gain of 0.2%, and there were no clear patterns. Some banks went up, some down, some miners went up, some went down, and likewise among the retailers. Gold and oil fell, copper and iron ore didn't move, and Bitcoin continued rising to a new record high of $72,000 each. And the Australian dollar stayed above 66 US cents. Commonwealth Bank produced its monthly household spending indexes today from its own customer data. Now, the chart of it shows the impact of the start of RBA rate hikes in 2022. But although there was a pretty clear drop in the growth rate of spending, it's still growth. Spending is not declining, which I suppose is the definition of a cost of living crisis. Spending rises because everything costs more. And that is shown by two specific categories that haven't skipped a beat. Spending on healthcare, which is rising and has kept rising at 9% a year, and insurance, also rising at about 9% a year in a straight line. And that's finance.